WTI prices declined on Tuesday as markets digested recent geopolitical developments. We saw prices falling from a high at 65 nearly, down over 3% at 62.8. And this could continue to the downside if we actually break um, below this channel. What happened is that the US threatened 50% tariffs on India, which went into effect overnight as the country was unable to secure a trade deal with the US. The main point of contention was India's continued purchase of oil from Russia, which led to Trump to double the tariff. There's also escalation against China, where Trump is threatening China with 200% tariffs if it didn't export rare earth magnets. The potential for the tariffs to weigh on demand from the world's largest crude importer, which is China, likely contributed to easing prices. Still, within the geopolitical context, discussions for a peace deal to end the Russia-Ukraine war also continue, with European nations reviewing security guarantees for Ukraine. Reports circulated also that Russia was looking to bring back US oil majors as part of a peace deal. So all of these um, catalysts, all of these signals actually weigh on the price of oil. Iranian crude production also reached peak levels. In July, it came out at around 3.2 million barrels on a daily basis. And this is what we actually currently see the prices moving lower down. Now, the only catalyst I would say for potential upside for the oil markets, I would say would be like escalation in the war between Ukraine and Russia. A lot of the other drivers actually are adding bias, downside bias in the oil markets. We did correct to around the 38.2 Fibonacci, right? So if this is indeed just a pullback, it would likely continue in the longer to medium, in the short to medium term, I would say. Lower down, opening the door to even 56. Okay, obviously, uh, without breaking below the previous low over here at 61.20, then this wouldn't go anywhere close to that level. For the time being, and looking at this channel, there is a potential for a bounce to the upside. But if the support level at 63.70, which is the previous low recorded back in June, holds firm, then it might just be a simple retest for further continuation to the downside. So on the one hand, I would be looking for a retest of that level, stop loss above the previous high, right? And a move to the downside. There is different ways to do this. We could, in fact, also use the to the opposite direction. We could use the measured move. So the length of this wave to the upside all the way to the downside. And we'll look for the 61.8 initially and perhaps even lower down. So this would be one of the scenarios. And I repeat, assuming prices are going to be going higher, but stopping at around the 63, 64 level, or even to the channel over here. So a rejection here with an increase in volume could see further potential downside. Now, the markets, the outlook for oil remains downward overall. So any potential upside would be short-lived. I would be a bit more cautious in terms of long positions, but if we look down on the 1 hour, and if you're a short-term trader, we have on the 1 hour divergence, and we have kind of found support, which is the 61.8 Fibonacci extension and the middle of the channel that we just identified, right? The middle of the channel. So in this particular case, and I repeat, if there is some sort of escalation, it could also be a technical bounce, to be honest, then um, one scenario would be to position a stop below the previous low, okay? And we would be looking initially to go up to the previous high at 23.6. But if you consider this move to the upside up to the 61.8, then that comes exactly at 64. The risk to reward ratio is 144 in this particular case, and the chances, the probability of that going there is not currently, based on macros as well, too too high.